Consumer uncertainty also looks rough. You brought a chart that shows it surges to a record high. What, ahead of the election? Is this election related, or?
Yeah, it's really stunning. It does appear to be election related.
What does it mean, consumer uncertainty? What are they uncertain about?
So this question in the survey is like, how do you think business conditions generally in the country are going to be over the next 12 months? Good times, bad times, don't know, you're uncertain. And so here we just have the most people saying we're not sure how it's going to work out. In the history of this survey, you can see this chart goes all the way back to the 1970s. So this is pretty stunning. And the other spikes have been around elections. So that previous one was in 2012, right before that election. The other ones, you know, in 2004, they tend to spike a few months before the election. But this definitely seems like a potential issue if you're worried about consumer spending, that sort of thing.
That's interesting because that type of thing, that sort of sentiment gauge uncertainty, a lot of times also reflects a kind of wealth effect when there's sell-offs in markets and volatility. But if you look at the chart, it doesn't really look like it. I mean, there's not a huge tick up in 2008. There's not a massive tick up in 2000 that you would expect if it were, you know, heavily influenced by what investors are feeling in terms of their, or what people are feeling in terms of their investments.
Right, and the big difference there is like in 2000 and 2008 when we were going into recession, you just had a lot more people saying, well, we think times are going to be bad over the next 12 months. So there was certainty, but of a bad outcome.
Very interesting.
Yeah.
You've got another one here that I like. It feels like it should be one of my charts because it's stocks, but nevertheless, you brought it here. So let's look at it and pull it up real quick. You're looking at the return on equity of U.S. companies, very low. What does this mean through the lens of the U.S. economy, or what the Fed is going to be doing?
Yeah, so this is from the quarterly flow of funds report that we just got today. And it shows that profitability is a huge sort of economy-wide issue at the moment. This kind of reinforces the notion that, you know, we're in a very low investment environment because we're just not getting a lot of return on investment. And so, you know, that's why we're not seeing a big pickup in business investment. And it kind of, you know, parlays with the idea that inflation is still low, interest rates are low, returns just generally are low right now. And so this has obviously been heavily affected by what's been going on in oil and gas and that sort of thing this year. But certainly both here and in the GDP numbers, we do see a big drag overall, even if it is from specific sectors.
If you were to include financials in there, I know this one doesn't, what would that chart look like?
Probably not very good because because financial, of course, return on equity is quite low as well, given all of the increased regulations since the crisis.
What's interesting also is that it really peaks out around 2012, which you look at, I was just talking about earnings expectations, and you look at earnings as well. It's the same situation where the earnings growth up until this year has been there, but not up to the same degree. There was this massive bounce back after 2008 and 2009, but it still hasn't been there. To get this number up, what do companies need to do?
Well, that's a great question. You know, I think that has to do with, you know, productivity trends and some things. You know, it might not just be a matter of you can flip a switch. And, you know, I think that's the trillion-dollar question in all of economics right now. Right. So we'll see.
a lot of the stock outlook does come from from utilizing capacity and also companies stepping up and actually taking risks in the market.
Yeah, or the perception at least.
Right, exactly.